Hey everyone, welcome back to Corporate Decoder, the place where we take a peek behind the curtain and see what the big companies are really up to. And today we're diving into a fresh report from Intensity Therapeutics Incorporated. And let's just say they might be cooking up something interesting in the world of finance. So picture this, imagine a company that needs some serious cash, and how exactly do they get it? Well, they go to investors and sell them a piece of the company. Today's report shows us exactly how Intensity Therapeutics Incorporated did just that. They sold a whole bunch of their stock to a big investor to raise some money. Our focus today is on what this really means for Intensity Therapeutics Incorporated and its shareholders. This isn't just a dry document about how many shares were sold, it is about how a company is funding its future and what that tells us about its current health and its plans. Let's talk about the main event, a big money deal that happened on the 30th of October of last year. Intensity Therapeutics Incorporated signed an agreement to sell 5 million shares of its common stock. Now normally you might see shares traded on the open market, but this was a special deal, a registered direct offering, where the company sold these shares directly to one big institutional investor. The price for each share was 80 cents. So for selling 5 million shares, they brought in a total of $4 million before they paid any fees or expenses. This is a pretty significant chunk of change for any company. It's like getting a big boost to your bank account to fund whatever projects or operations are next on the agenda. Now, how did they do this legally? Well, they had a registration statement ready to go. Think of this as official permission from the government, the Securities and Exchange Commission, or SEC, to sell these shares. It was filed back in July of 2024 and got approved shortly after. So this wasn't a surprise move, it was planned and legally set up to make this sale happen smoothly and transparently. What is interesting here is that after this big sale, the company is agreeing to certain restrictions. They're saying for the next 30 days they won't be issuing or selling more of their stock or anything that can be turned into stock. This usually happens after a big offering to prevent flooding the market and to give the initial sale some stability. It shows they want to manage how their stock behaves right after this deal. To make this whole deal happen smoothly, they brought in some expert help. They hired AGP Alliance Global Partners to be their placement agent. Basically, this firm helped them find the investor and manage the process. For their services, Intensity Therapeutics Incorporated agreed to pay them a fee of 7% of the total money raised. That means out of the $4 million they got, they paid AGP roughly $280,000 in fees. They also agreed to cover the agent's expenses, including legal fees up to $50,000. This is pretty standard practice in these kinds of direct stock sales. They bring in professionals and pay them for their expertise and access to investors. So when did all this money officially change hands and the shares get delivered? Well, the deal was expected to wrap up around the 3rd of November of last year. This is the date when the investor would officially get the shares and Intensity Therapeutics Incorporated would get the cash. Of course, there are always a few final conditions that need to be met before everything is completely settled, but this is the target date for the transaction to be completed. Now, how did the public find out about this big news? They announced it with a press release on the 31st of October. This is how companies communicate important events to the public and the market. It's how investors learn about these kinds of financial moves, and it often influences how the company's stock performs. This press release likely gave more details and confirmed the terms of the stock sale, making sure everyone was on the same page about this significant financial transaction. So what does this all mean? Well, Intensity Therapeutics Incorporated basically got a $4 million injection of cash. This is good news for a company that likely needs funds to grow, invest in research, or develop new products. Selling stock is a common way to raise capital, especially for companies in potentially high-growth sectors like biotech or technology. They're essentially selling ownership stakes to fund their future operations and growth initiatives. It shows a proactive approach to securing the resources needed to keep moving forward. Now, looking beyond the headlines, it is important to consider the context. This offering was done under an already effective registration statement. This suggests the company is prepared for public capital raises and has gone through the necessary regulatory steps. The engagement of a placement agent like AGP Alliance Global Partners indicates they are serious about maximizing the proceeds and ensuring a smooth transaction. Paying a 7% fee is on the higher side, but for a direct placement to an institutional investor, it's not uncommon, especially if it brings in significant capital quickly. The restriction on issuing more stock post-offering is a standard move to prevent dilution and market volatility. It's a sign that the company is thinking about managing its share structure carefully. This $4 million could be used for a variety of things, like funding clinical trials if they are a biotech company, like their name suggests, developing new technologies or expanding their operations. Without more information on their specific business model and current projects, it is hard to pinpoint the exact use, but capital raises of this magnitude are typically geared towards significant advancements or strategic initiatives. The fact that they are issuing common stock means they are giving up a piece of ownership in exchange for cash. This can be a double-edged sword. On one hand, it provides needed funding without incurring debt. On the other hand, it dilutes the ownership stake of existing shareholders, meaning each share represents a smaller piece of the company. The price of 80 cents per share is also a key indicator. It suggests that the market, or at least this particular investor, valued the company at a certain level at the time of the sale. For existing shareholders, if the stock price was significantly higher than 80 cents before this offering, it could be seen as a negative as they are selling shares at a lower valuation point. However, if the stock price was hovering around or below that mark, this might be seen as a positive opportunity to raise capital under the current market conditions. Overall, this filing tells a story of a company actively managing its finances to pursue its strategic goals. They've successfully secured a substantial amount of capital through a direct stock offering. The key now is how effectively Intensity Therapeutics Incorporated will deploy these funds. The success of this move will ultimately be judged by the company's ability to generate growth and deliver value to its shareholders in the coming periods. Alright, that is our breakdown of this Intensity Therapeutics Incorporated filing. What do you think about this stock sale and what it means for the company's future? Let us know your thoughts in the comments below. If you found this insights valuable, hitting that like button really helps us out, and be sure to subscribe for more deep dives into corporate filings. And don't forget to check out our Discord community linked in the description for more discussions and exclusive content. Thanks for watching. See you next time.